one thing to remember for those of you that are in that super constricted spot where you're really anxious about your money is it's really good to experience the success you are chasing now. I can tell you from this year, you don't know how long you have. I mean, I'm not trying to be heavy, but like my business partner died out of nowhere. Like if you have resource and you can enjoy yourself, you should do so, in my opinion. You will actually be a more functional and better team member for your team and your family if you're well taken care of. You can only give from your own surplus. If you don't build up surplus, you can't give. So you're doing nobody a favor by sacrificing and grinding and working yourself into the ground and then having no energy left for your relationships and no energy left for your physical body. Like, you're not doing yourself a favor. You think you are, right? Because the mantra in our culture is sacrifice, grind, sacrifice for the family. And it's like, work hard, yes, but take care of yourself. So for me, like, when I grew up, this is a small example of this. It doesn't have to be grand, right? Here's the small example that I like to give, which is I grew up watching MTV Cribs. You guys remember that? I had the TV on, you know what I mean? Come home after school, MTV Cribs. You'd have little Bow Wow and little Romeo, and they'd open their fridge, and it would be full of every variety of beverage. Beverages that I never saw in my house, Capri Sun, and just all kinds of beverages. Whatever it was, right? So for me, I was always like, man, I will have made it when my fridge is full of beverages. And Carrie can tell you, it annoys her to this day. I fill that fridge full of coconut waters and sparkling water. I open the fridge, I see those beverages, I'm like, damn, I made it. Every day, I feel like I made it because my fridge is full of beverages, which was something I always wanted. And I will tell you, if you don't understand the joy of a fridge full of beverages, you haven't lived. I'm telling you, anytime you want something, you go to the fridge, open it, beverage. It's in there. And you know what? A couple times a day, I personally would like a beverage. And I have it. So my point is, like, that if you loosen up a little bit and, you know, get that massage once a week or whatever, it's not going to sink you at this level. Be willing to take care of yourself because it actually ends up being the best thing you could possibly do. And frankly, do you want, let's run the exercise, and this is kind of heavy, we're going to get into the money here, but like, what happens if you died tomorrow? Were you happy with how you spent the last 3 months? Did you have experiences that you enjoyed? Did you make time with your family and loved ones? Did you have fun? Like, you've got to do that. That's on you. Nobody's going to do that shit for you. Nobody is. You have to do it for yourself. And one of the spots that I see with the people who are in that constricted state, which is usually about 50-50, right? And then it's like, kind of like you either err to one side or the other. I definitely err to the side of I'm spending it. That's where, you know, that's why Molly's getting on my case about 60 frequencies. I'm like, we gotta spend, man. So I err on the side of like, let's ball out of control. But I have learned over the years that there's a balance to be struck. So anyways, my point is that that the people in particular who err on the side of constriction and anxiety and tightness and worry and hold the money and don't spend it are always the ones who don't take care of themselves. Because if they were taking care of themselves and having fun, they'd be a little looser, and then their money would flow a little bit more, because money wants to move. All right, let's talk a little bit about it. So the one exercise, I don't want to get into, like, look, we can have a whole conversation, and we can spend 2 days talking about financial models, analysis, trends, how to look at your money, all kinds of stuff as it relates to the money. But you know what's more fun? Talking about how to make more money, which is why this whole conference is about marketing, in a way, right? So I spend most of the time telling you, like, look, here's how you make more of it. Then we'll spend a little bit now talking about, like, here's how you make sure it doesn't all go away once you've made it. So that's kind of like, I want to do 30 minutes on this topic because it's really important. And most people in their entrepreneurial journey at some point go bankrupt, get way behind on their taxes, or have some crazy expenses that they weren't expecting, and they didn't have defensibility for it. They didn't have that 12 months of the business or 2 years of personal, right? So you want to build in these buffers. So the first tip is have a goal for business liquidity and personal liquidity outside of your normal expenses. It's a lot like taxes, where you take 30% of the money that comes in, you put it for taxes. Take 5% and put it towards one of the two, 2.5, 2.5, whatever it is. Business liquidity, personal liquidity, money that's pulled aside that you're not touching. So anyways, that's tip number one is have a goal for that. Tip number two is these are the reports that I look at, okay? High level, if you're not doing this once a month, you are harming your business. No question. This is an act of violence, an act of aggression against your business if you do not do this one activity, because you are the only person who has the power to do it. You can't hand this off to a CMO. I mean, you can, but you don't really want to. You want to look at this with whoever your financial strategist is, whoever your CFO is. And we can do sessions where I bring on my CFO and I bring on my financial strategist and we talk about what we look at if you're interested in going deeper on this. But first and foremost is have your books done by the 10th of every month. Hire a bookkeeper, pay him the $2,000 a month or whatever it is. Make sure those books are done. That by February 10th, you have January's numbers done. Has to be that way. Otherwise, you don't have enough data to see what's happening. If you're getting that far behind on your books, something's wrong. So get your books done by the 10th of every month. No exceptions. Period. No excuses. Get that shit done, dude. There's no reason not to. Then have your bookkeeper or your CFO set up these 3 reports in your QuickBooks that you will look at on the 10th of every month when those reports come in. A balance sheet comparative year to date, a profit and loss comparative year to date, most important, and a profit and loss monthly comparative year to date. We're going to look through the profit and loss. I just want to show you this real quick. We're going to look through this middle one, the P&L YTD, profit and loss of the business year to date versus the last year. So you can see the trends. Hey, what happened in January this year? What happened in January last year? Anything I should be looking at? What's going on? You spot trends in here, and it's fascinating. You're like, damn, why is shipping so much more expensive? Let me investigate that. I found $1 million in our business last year in the shipping department by doing this exercise. I'm not saying you're going to find $1 million. That happened to me. Literally, when you look at the P&L for 18 versus 17, we have $1 million more in profit because I fixed an error in the shipping department that I found looking at the P&L. I'll show you this, okay? So this is the profit and loss. What you're looking at is January 1st through 12th, 2019 versus January 1st through 12th, 2018. January 1st through 12th, 2019 versus January 1st through 12th, 2018. Total income, we have $645 this year versus $764 last year. We're $100,000 ahead of where we are now last year. Of course, there's things that go into that. You might find, oh, I ran a sale last year or whatever. But you can see that and you can say, huh, what's going on? We have, you can see cost of goods. Last year, we spent $116 on freight and shipping versus $42. That's the difference I was telling you about, right? Made it like 3 months into last year. So I found this error in the shipping department, whatever. Point is, I found it by looking at this P&L. You can see that our cost of goods here is nothing because the way that we run our P&L, by the way, is not, I have another report that shows me of this 645, how much was the cost of goods on that, but the way that we look at our standard P&L is what did we spend that month for product, not not how much did this product cost us, but this month, did we make a purchase for product? Because we're looking at it on that kind of basis. But anyways, the point is that I want to make is look at your P&L because what you can see here, oh, here you go. We spent $169 on product in 18 at this time. We placed a big order, and in 17, we haven't placed a big order. All right. So what you can see is we made $645, and because we don't have an order on the books, we're at $570 versus $431. So we actually have more profit even though we made less. Okay, keep going. Now, we've got the next part of our P&L, which is our advertising and promotion. Look at this. Molly, we're down, right? We're at 174 in Facebook spend this year versus 199 last year. 37 in Google versus 42. 16 on other stuff versus 52 on other stuff. We must have run oh, this is Pinterest. Pinterest, we spent 50 last year because we were still running Pinterest. This year, we haven't spent that 50. So total we spent this year is 245 versus 328. So we spent way less on ads for a similar amount of revenue. We're not running Pinterest. We're not wasting money there. Looks like we need to get our Facebook spend up. Looks like we're still at that same trend of down about 5% on Facebook and down about 1% on Google, right? So we're trending so far this year the same way we were last year. Now, I know my goals are to spend way more, so I'm like, wow, look at that. The trend in the first 12 days is exactly what it was last year. I'm down. I need to get that up. So I learn a little bit by looking at the P&L, right? And then total advertising and promotion, that takes into account photo shoots and other things, 250 versus 345. So we're actually doing better. We didn't spend a bunch on photo shoots. And then we have, after a bunch of other stuff, this year so far, our net income is 227 G's on that 5. So that's like a 50% net margin. Now, of course, we haven't made, that's not taking into account how much the COGS on that product was, right? So I don't want you to model my P&L. We've got a way that we're doing this, but my point is, if you're not looking at your P&L at the end of every month and looking at the trends based on last year and based on the previous month, you're going to harm your business because there's stuff in there that just looking at it, you'll see stuff. And it's hard to look at, and it's confronting, and it's intense, and you need someone like Zach to hold your hand and say, hey, man, we got to do this, right? You can set up accountability. You can have your CFO make it happen for you. Another little good trick is, anyone here heard of Mint.com, M-I-N-T.com? Mint.com is a service, right on, yeah, that will connect all of your personal credit cards and personal bank accounts, and then it will give you a data analysis of where you're spending your money. How much, it'll automatically categorize your expenses. It'll tell you you spent this much on groceries, this much on this. And so in your personal life, it's like a P&L for your personal life. You can see how much you spend on X. I'm not telling you to curb your spending unless you're on the 600K side, in which case you probably should a little bit, because you could put that back into the business, better served. But Mint.com is this same strategy if you want to go the level. Some people say, look, I work hard in my business. I do everything to make a bunch of money. It's hard to make profit. Like for me, I'm in as high of a tax bracket basically as you can get. I make enough money to not get the breaks of the middle class, and I don't make enough, Carrie and I together, and we don't make enough to get the breaks of the big corporations. So we're at like a 48%. So for example, if our business makes $1 million in revenue and we spend, 400 grand on ads and 250 on product and 100 on team and whatever. Let's say we make $1 million in revenue, and at the end of the day, there's $100,000 in profit that we get to distribute to ourselves. Of that 100 grand that gets distributed to me, I give the IRS 50. So I made $1 million. At the end of the day, I only had 50. So when you're spending money in your personal life, if you're me, every dollar I spend on my personal Amex, the dinner that I went out, or the lunch I had the other day at Nobu on my personal Amex, right? Every dollar that I spend is $2 that I took out in profit from my business. $2 in profit equals $1 spent in my tax bracket. You guys are probably, who knows where you are, but you're somewhere between 30 and 50, right? So when you know that, if you're interested in doing this same exercise on your personal life, which there's an argument, and I'll give you the argument for the other side of this. If you're interested in doing the same exercise in your personal life, I have not found a software better than Mint.com. Simplifies it, makes it easy, look at it at a glance, tells you where you're spending your money, gives you the trends, kind of cool. The argument against it is, hey man, let me breathe. Like, I pull this money out of my business. I don't want to be monitoring where I'm spending. I want to buy my groceries. I want to have my clothes. I totally get that. And frankly, I fall way more on that side of it, of like, and then Zach's on the other side, like, hey dude, what are you doing, So I have someone checking. So Zach is someone who's fully involved in my financial life, 100%. Knows everything I spend on the personal side, everything that gets spent on the business, where it's all going, a second set of eyes, fully in, 100% in. I actually have a third person who is a financial strategist who I've known for 10 years, who's been a business mentor for me, who's also fully in, but is more so on the business strategy side, not so much on the personal side. But I will tell you that our finances have gotten a lot cleaner and a lot smoother when there's been someone besides me looking at it. And if you can find someone that you trust enough to let in and help you, it's nice. It's helpful to have accountability. It's helpful to have a buddy. It's helpful to bounce ideas off someone. So Mint.com is a similar exercise that you can do if you want. I don't think you should start there. I think you should start with just a P&L at the end of every month. This is the number here. You see this net income here? This net income. So like I was telling you, if you make $1 million in revenue and you have $100,000 left after everything, staff salary, cost of goods, cost of marketing, cost of shipping, all of it, right? That's a 10%. I don't know why I'm air quoting that. For whatever reason, I think 10% needs air quotes. I always kind of like feel like I do air quotes sometimes, and I always kind of feel like, man, do people still air quote? Is that still in? Apparently it is a little bit. I air quote. So that 10% is known as your net margin. And that number and that percentage is the most important number / percentage in your business, period. Here's why. If you're looking at your business the way that I am, which maybe you're not, okay? Some people look at their business this in camp, not the way Ezra looks at it, okay? So in camp, not the way Ezra looks at it, I need a better name for that camp, which is on this side of the stage, is I love my business, I'm never gonna sell it, or it's not sellable for whatever reason, and I can give you some examples of why a business wouldn't be sellable. And I just want to run it and enjoy running it and take cash flow. I'm never gonna sell this thing. I don't care about the net margin. I care about whether or not I can run it pleasurably and pull cash to live my life. If that is you, and you never intend to have an exit event, you never intend to have a liquidity event, you don't have to worry about net margin. You just live on the cash flow of the business, you're stoked. However, when you study wealth, and you see the way most people amass great amounts of wealth, which, by the way, one of my goals, hey, we're all in the wealth creation game. We're all in the resource generation game. We're playing it. One of my goals is to amass as much resource as I can in a pleasurable manner because I have causes that I find noble that I would like to direct that resource towards. I have people that I would like to take care of. I have communities that I would like to take care of. I have things I want to do in the world that require resource generation, okay? People who generate large amounts of resource, money, wealth, do so on liquidity events, on exit events. You look at like where people are making big money, that's where it is. It's why the private equity business model that Bill D'Alessandro won't be talking much about, but that he's deep in, you can ask him about in the Q&A, is the highest return business model that exists in our market pretty much today. Because what it is buying businesses, operating them and growing them, and then exiting them. You get crazy multiples. So what I'm getting at is that this net margin number dictates how much you will make when you sell your company. And if you have a company that has investors and that net margin starts to drop, they freak out. They will get on the phone, they will fly down. They start to freak out when this net margin number drops. And you know what? So should you. If you notice a trend of all of a sudden net margins going down, 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 something is wrong and you need to fix it. So you really want to be looking at net as a very important number that you're trying to at least maintain stasis with. And so for e-commerce businesses under 5 million in revenue, let's say you're doing 5 million in revenue at about $1 million in profit, which is a high profit margin. That's a 20% net margin, which is hard to do. You probably more be like 500 grand in profit, which is more like a 10% net margin, which is more real. But let's say you did 20%. That $5 million in revenue at $1 million in profit, a 20% net, is going to fetch you on the open market between a 2 and 6 multiple on that net profit. So at $1 million in profit, you're going to get between 2 million and 6 million in general when you sell that, depending on whether or not you're selling to strategic buyers or financial buyers, depending on if a lot of that business is recurring / repeat business, depending on whether or not you have multiple streams of customers, all kinds of stuff that we all work really hard on. But the point is, this number dictates how much you get paid in the end. And for me, my goal is to include in my business career liquidity events. I want to sell businesses. I like building them. I like operating them. I also like selling them. So I pay a lot of attention to that net number. Okay. So this, I just wanted to show an example of it, is the profit and loss year-to-date monthly comparison. So you can see it's like September 2018 versus September 2017, October 2018 versus October 2017, et cetera, et cetera. So it's the same thing. It's a profit and loss, but it breaks out the months for you. So you can see the trends on a month basis easier. It's this one, profit and loss monthly comparative year-to-date. Get your bookkeeper to create that for you so you can look at it and see the trends.